G'day. Welcome to the closing bell on the 15th of Feb, the first time it's out on the Saturday. And last week, I went into a pretty big speech on that US dollar and US bonds and that sort of thing, saying that we're looking like uh, possibly a serious reversal could be underway with the US dollar flying higher into Trump's election, also US bonds selling off massively with the 10 years heading up above 4.5%, um, up to 4.8% almost recently. And that it feels like the heat is coming out of that. And that's a pretty interesting thing because it feeds into so many other asset classes, of course, a real central point for the whole financial markets. And I'm getting more bearish since last week. That US dollar now cracking through 107, really as I speak now. Don't know where it is when you're watching it. It'll be interesting to see. But I think today I'm going to, really stick the neck out a little bit more and show you where I think things could be heading and the effects that's going to have on markets out there. Also, the bonds, I think, looking close to being a buy. The long bonds, something like TLT, looking interesting to me as an investment at this point. So I think it is still early days, but when you're trading, sometimes it's getting in early gives you the best risk reward on trades, and if you wait too long, it can make things a bit more difficult. So sometimes you do have to bite the bullet, which I guess I'll be doing a bit of today. I'll also be looking at gold and silver because we know big shenanigans going on in the gold market. I think everyone's a bit confused about what's going on. If I could explain it for you sort of quickly, I'm still trying to wrap my head around it, but US dollar price of gold going up ahead of feeling that there's going to be tariffs on gold, imports of gold. I think people taking advantage of that arbitrage by selling US dollar gold, buying gold in London, actually shipping out that gold and delivering. But then the gold in London has been running low. They've got big delays. So that feeding into a problem. I mean, if you're short gold and you've got to deliver and you've got no gold to deliver, that's a bit of a problem. So then you're buying the futures contracts and you're selling further forward until you've got time to pay it off. So let's say you're buying February gold and selling April gold. So there's also yield that people can make on that trade, buying the February futures, selling forward April. They could make about a 6% yield doing that. So then they're taking delivery of the gold and then holding that gold till the April when they could sell it. They know that return is going to happen. So that's like pretty easy money, getting some pretty good yield. So there's all those sort of underlying dynamics going on in the gold market. And of course, the Bank of England dragging their feet in getting people their gold now because so much has been taken out, which is causing some problems, especially if you're short and you haven't got the gold to deliver. So the thing is, we could see some heat come out, I guess, if that all gets fixed, all of those problems. Maybe Trump comes out and says he's not going to put any tariffs on monetary metals, and that could take the heat out of the arbitrage, and the time could pass. Bank of England could get the gold out to people, and things could even up and fix themselves, and maybe gold will actually come off in the short term after this sort of panic. But still, long-term gold looking absolutely hot, and no doubt about that. But silver, the one that could be building up pressure because it has some signs of dislocation in its market, and it doesn't have any central bank as a sort of final port of call if there's any dislocation events that the central bank can lend out gold to people to fix the market. Silver doesn't really have that. So if there is a dislocation event, you could see quite a run on silver. So that's the sort of exciting things going on out there, I guess. There could be some opportunities. So let's quickly jump to the charts, and hopefully I can wrap through it really quick. So here's that US dollar. If you've been following from last week, uh, I've been showing you just the key levels. We've got that wave from 2021 to 2022. I'm analyzing that. There's your point of control. Lots of work done above there for the last few years. And Trump getting elected, there was a big run on the US dollar, really flying higher, but that heading up into that sell zone, which is where my attention jumps to attention if there is a reversal out of there. And so that's why I'm very interested in what's going on at the moment. Weekly sell pivot I showed you a few weeks ago. Lots of volatility, but selling pressure really coming in. And we've got an old high from mid last year there. So that's sort of making me feel that sense of, it's been a false break of that level and back under there, watch out. And you're getting targets possibly back towards that midpoint. So I'll go into the close up soon. Just wanted to point out that MACD turning negative on the weekly. So I know the trend hasn't turned down yet, but the MACD can sometimes, in the right spot, give you a bit of a pre-warning about things before that weekly trend does actually turn down. It can give you a pretty good hint, although it'll have more false signals, but because it's happening from a really important zone, I'm inclined to go with it. And so if I'm looking at that as a possible trade even, sorry about that, if I was just to look up at this nice and close, I'd be looking at this trade, really thinking about it, saying, well, look, if this does turn down, and again, don't know where it is for you, 107, I'm just getting the feeling this could actually break here, something like this, really start to trend down. And, the target, of course, would be back towards that midpoint, the point of control. So that's down around 102, midpoint of that whole wave. And really, if things just find support and then just turn straight back up within this weekly uptrend, I'll be all bets are off. So, above 110, that US dollar index, I'd be pretty inclined to say, okay, got this wrong for now because it really should sell off pretty rapidly. So yeah, there you can see there the red bit that's saying on a trade entering here. There's your stoppy up there, and your target really is initially sort of down there. So you've got 1.6 to 1 risk reward on that for starters. And look, there's a lot of downside to there. You could be taking profits, part profits a bit earlier. Let's say you get short around here. If you do get a nice impulsive decline in the short term, you might take, let's say, it gets down to 104. If you took half of your profits, so if it actually sold off there, took half your profits, your average entry price would be back at that point where you're wrong, up at 110. So that's short at 107, take half profits at 104, and that would then make your break-even price up at 110, and then you just hold it. And, if it goes back up there, you stop out, break even, and who knows, this could actually be a beginning of a bigger sell-off in that US dollar than many expect. Maybe Trump wants a weak US dollar to help balance up trade. So I think it's looking pretty interesting to me, just from a technical. It's pretty rare that you end up with these sort of setups that are quite compelling. So I'm sort of sticking my neck out, saying I reckon that US dollar is in for a bit of a pounding over this next few months. and I'm happy to say I'm wrong if it goes back above 110. And look, so it's similar with the US 10-year bond yield. I'm going to repeat from last week. I think this is sort of an important going on, what's happening in the market at the moment. I won't recap everything from last week. You can watch last week's one, which is quite comprehensive in letting you know what's going on and what I'm thinking. So this is just the US 10-year bond yield chart. Obviously, long-term massive uptrend in yields, peaking at 5% here, sort of at the end of 2023. So I'm looking at this wave higher. That's the most recent wave higher in yields, and just looking at the way it's oscillating between the buy and sell zones. That's the yield. And just saying, look, this is starting to look like it's peaked. We got the weekly sell pivot a few weeks ago. Uh, Rates went up during the week due to CPI, PPI, but then fell quite rapidly. So just be interested to see whether this can actually start uh, heading back towards that sort of 4% region, 4.1. I have a feeling that's a pretty good target on these bonds, and uh, I reckon it could even go lower ultimately. So that would be the first target around 4.1, and can it break and actually start turning down and threatening these major lows in yield, around 3.6, 3.2. That's a longer term story, but it's certainly, I think we could look back on this as the beginning of a sustained move to the downside in these yields, which is, of course, is important. Um, as I was saying last week, property stocks, etc., etc. And yeah, again, above 5% on those 10-year bonds in the US, and I'd be off that and saying, wow, watch out. I don't know, what's going to happen here if those yields go above 5%. But I think for now, that's a pretty good spot to be saying below there. I'm starting to get bullish on the bonds. So, just quickly looking at that TLT, which is a 20-year bond, US bond ETF. And this is where I'm looking at that and wondering, oh, this could be an interesting buy. That's really just the reverse, of course, of what we were just looking at. And it's just starting to turn up. I'm just looking at this. We're starting to see major support come in, and really a monthly buy signal on this at the end of this month. We can see the MACD turning up. It's 88 bucks or whatever it is. I'm pretty tempted to say that that's going to be a pretty good buy um, uh, based on what could be coming. So that's sort of one way to play that if you have access to trading offshore. So just moving on to gold, we don't need to look at gold for long. It's just continuing on its merry way. I think it's part of this dislocation and what's going on. Massive rise in inventories at the CME in the US. I think there is lots of big players, looking at this dislocation, putting on trades based on that, which can be quite confusing. So, you don't want to say that this is now, not going to all of a sudden get fixed and then reverse very rapidly. I mean, it really can happen when these sort of things go on. But while this trend is happening, and it really is a strong breakout, there's nothing other than to say go with it. Certainly, I've already taken plenty of profits out of gold stocks, so I'm happy to see this just continue. But I think silver is the one that may be building up for something a bit more interesting. So here we have silver on a monthly chart going back a long way. Some of you may remember that huge rally up to 50 bucks in 2011. Absolutely massive. I'm doing my calculations off that huge run. So just looking at, so you can see big run, failure. There's your next wave there. So I'm looking at that wave, doing the calculations. We've got the buy zone of that wave here. There's your point of control. And here's your sell zone. So when you're looking at it from that point of view, you can see we got the collapse all the way back into that buy zone. That is really what held it. You can see basically a long-term range created in that area. Then it ended up taking off again. And where did it take off to? Well, no surprises, straight back to the point of control. But there was still the selling pressure. So we saw another wave down. Where did it go to? Look at that. Straight to the buy zone perfectly. Turned up. We've got the long-term trend shift there. Rallied through. Again, point of control. Now it's actually finding support and it's holding above the 10-month. So the trend is there. And so what this is saying is sort of actually breaking out above the point of control. And once you do that, this can have targets up to that sell zone. So the area where you'd be concerned would be, up there. Well, that could be a point where it finds a lot of resistance before maybe heading higher. But just looking at this, it's sort of saying this is pretty constructive, and especially if there is a dislocation in the market, this is when you could see some sort of real blast off and spike up into that area. So that'll be interesting to see whether it can really catapult higher. It's been lagging a bit at the moment, even though people thinking it should really take off. So it may not eventuate, but just technically, the situation is there that this is brewing, and up through what is it, $34 or something, whatever that high is there. I'll just quickly check. Nearly $35. So I'd be sort of saying, yeah, watch out above $35 on silver, and it could really blast off through there. So not quite there yet, but maybe there's some silver stocks out there. There's not many, but that may be a spot to go hunting for a few opportunities. And so that's, I think, enough for this week. We are looking at changing things around in Closing Bell from next week. Happy to get your comments and that sort of thing. We'll be sort of switching to a bit of a chat with Callum about the week's goings on and what's been happening. I'll still be looking at charts, and yeah, hopefully it can still be a really interesting thing for you guys to watch and learn, and find some opportunities, and learn about what I get up to with members of my trading services, so that you guys should join one day if you want to start going after some big returns with me. All right, that's enough. We'll talk to you guys soon.